All right, guys, we have the top stocks to watch this week, and I'm super excited for this week in particular. You know, there is obviously the impending president that will be Joe Biden, and so I think this is going to be a good one. It's going to be a topic of discussion moving forward, not only because of these earnings, but because of what is set to be happening, especially with housing subsidies and everything else, and that is DR Horton, ticker symbol DHI. They have earnings that come out, a pre-market on Tuesday, the 10th. Their estimated earnings per share at $1.75. DR Horton, if you guys don't know, it's America's largest home builder by market cap. Accounts for 17% of the market share of housing sales, which is crazy. They're huge. This is something that I think that is going to continue to grow here because of those subsidies and because of affordable housing that was part of Joe Biden's plan, that they'll probably, move forward with that to some degree, but also because interest rates are down, and we talked about a lot. Housing has been booming. I mean, houses are barely on the market before they get bought up. We saw that with Zillow's latest earnings about how we've seen demand continue to rise in home sales. Interest rates will remain low, according to the Fed, for the foreseeable future. So I think DR Horton is primed to do really well this earnings. They crushed earnings last time. Estimated earnings per share here is $1.75. I think they come in at $1.93 and beat.
Ooh, okay. So check this out. I agree with you on everything you said. We're both really bullish on real estate sector. Man, I have a bigger beat. Last week you were like going bold. I got $2.10, which is incredibly ambitious.
I was going to call over $2, and I was trying to be like not the crazy one, but so I'm glad you did.
Yeah. So last earnings, they beat by 30%. So they came in at $1.72. They had guidance of $1.75. That gives me confidence that they'll beat, and they'll beat hopefully handily, but that would be a record for earnings for them in their public history. So it's ambitious, but I feel good about it. That's how strongly I feel about the industry right now. And I know some people are down on it, but I think over the last couple of weeks, we've seen a lot of industry analysts and experts realize, like, listen, this isn't slowing down like you think it's going to slow down. Maybe a little bit, but it's only going to be slightly. So overall, I feel really good about this company. We have a couple of real estate plays that we really like. I've talked about Simon, ticker symbol O. That's a good REIT if you guys are interested in that. But really anything in the lines of real estate, home building, any of those are going to really do well for the foreseeable future. So that's a good one. The next stock we have is Wix. So that's something that a Chaos Crew member brought on our radar, and we've been watching the past week or so. Wix has earnings on the 12th, so Thursday pre-market. Expected earnings, a loss of 15 cents a share. So here's the thing, Brad. I was trying to think about Wix. And so what Wix is a website builder, and it really targets freelancers, basically the gig economy. So anybody trying to start a side hustle, like Wix is an easy platform to build up. Wix and Squarespace are sort of the top two competitors. And they're built for this. They're virtual. The company's virtual. Any lockdown helps them. And then obviously, like, the gig economy really helps them. I think people being at home, starting their businesses helps them a lot. So Wix is interesting because they missed last earnings, which was surprising. So they had an expected earnings per share of 26 cents. They missed big time. So they missed, 24 cents. They had a loss of 26 cents. So this is really hard for me. With a projection of a loss of 15 cents, they beat. I believe they beat. I don't think they miss again. But I have them. I wanted to make them profitable, and I did. They're going to beat. They're going to be profitable, 5 cents. I expect them to give good forward guidance. This stock should do well. So really like Wix. I like their model, and I think for the coming months, next couple quarters, they should be in a really good spot.
Yeah, I think so too. I mean, we've talked about this before, especially when it comes to Amazon, when it comes to Etsy, Wayfair. All of those companies are really supported in large part by people who are trying to build their own small businesses through e-commerce. And we saw a really huge increase in Etsy sales. We saw a huge increase in Wayfair. We just had Wayfair earnings last week, and they absolutely knocked it out of the park. Lots of those companies, a lot of those people that are working for themselves create their own website that then drives them to whatever platform they're selling their goods on. So I think that Wix is definitely poised here to do really well. You're looking at the chart here. I mean, there's a clear support on the daily at 240. It's made its way all the way up to 286. Obviously, on some really high expectations as far as a new president's concerned. We have a resistance all the way up here at $300 a share. I think that's going to be really key for Wix. So keeping an eye on this. If by some chance it does miss earnings, I don't expect this to go below that 240 mark. And if it does break or beat earnings, I think we see this have a monstrous Wayfair-like move. Now, just to give you guys perspective, Wayfair did move downwards right after earnings, but then had a monster move right back up over to over $300 a share. So I think that Wayfair and Wix, I think we could see a similar move if you just go ahead and look at their chart as well. Like them a lot. I think they come in at 3 cents a share. So I think they actually come in and be profitable. So that's kind of my expectations on that. Next, we have Disney, and this is going to be a really exciting one for me, I think. There's been a lot of doom and gloom as far as Disney's concerned with the parks. But the one thing that's been keeping Disney afloat has been Disney Plus with their acquisition of 21st Century Fox, Hulu. They have as of the beginning of August, over 60 million subscribers to Disney Plus. That's about a quarter to a third of what Netflix actually has worldwide. I think that, just keep in mind too, Disney Plus has only been around. They only launched it almost a year ago to date. So I think that Disney kind of, you add the parks side of it. Obviously we've seen shutdowns in France again and all that good stuff. They did lay off 28,000 employees, which isn't good, but it actually helps their bottom line so that they can continue to do the things that they want to do. I'm sure they will rehire all those folks back too. But I think that when you take Disney Plus and how they've been able to move the needle as far as that's concerned. I mean, you look at the market cap of Netflix, $227 billion. You look at the market cap of Disney, it's $230, and Disney's gaining ground in this market. I don't know how we don't see them beat earnings yet again. The estimates were a loss of 64 cents, and 8 cents was the actual. I actually don't know what. I don't know what I'm going to do with these earnings. I actually kind of wanted to call another expert, if you don't mind. I'm going to phone a friend.
Oh, here we go.
So
this should be fun.
So we're going to phone a friend. I know somebody who's been.
Please enjoy this Verizon ringback.
Know somebody who's been going to Disney World for the last 20 years. I don't know. We'll see if she picks up.
Hello.
Ma.
Hello.
Ma.
Yeah. Hey. Gotcha.
You're on the air.
Hey, Ma.
Oh. Hey, Brad.
That was Christian. That's Fat Man.
Oh.
It's me, Brad.
Hey, it all sounds the same.
Listen. Hey.
Yeah.
So we're talking about Disney, and I have no idea what earnings are going to be like. Listen, you were just down there, right? How bad was it?
Oh my gosh, it was like a ghost town. Like I literally brought me to tears. I mean, you know that we go once or twice a year for the past 20 years. I've never seen anything like it. It was, parks are empty. The resorts, there was nobody at the resort. Staff was like not to be found. They had like one person running like the cafeteria kind of restaurants.
Yeah.
What we call the walk-up windows or whatever. They would only have one person running those. We actually are friends with a really good chef down there that was part of the layoff. So
yeah, that's pretty tough stuff. And I remember you talking to me about that. But honestly, I mean, you look at this, and from an investment standpoint, you probably see Disney coming back from this, right? I mean, you're looking at Disney Plus. I mean, do you use Disney Plus at all yet?
I do use Disney Plus, and as you know, I'm a DVC member, which for anybody who doesn't know that, I'm a Vacation Club member, and we get the behind the scenes or whatever you want to call it, the scoop before everybody else does. Even with all the things, the regulations with shutting down, what they're shutting down next, what they're opening up next, that kind of thing. Disney will definitely bounce back. We're being assured of that based on our annual dues and things like that. So, yeah, I mean, it looks bad now, but they're not going anywhere.
Yep, I don't think so either. So last time they had a loss, or they had an expected loss of 64 cents earnings per share, and I'm leaving it to you to guess what the earnings per share are going to come in. Last quarter, they actually came in positive, despite what expectations were. This time, it's a loss of 71 cents, and instead of me guessing what the earnings are going to be, I'm going to leave it all to you. So what do you have the earnings per share coming in at?
Oh my gosh, I'm going to say, okay, this pressure I can't even handle. I just got out of the kitchen. Making chicken pot pies, just so you know. I'm going to say, don't laugh at me. You're going to appreciate these. I have mastered that recipe right now.
All right.
53 cents. That's what I'm going to say.
53 cents positive? Woo!
I'm going to say yeah, because, yeah, look. I mean, you know this more than I do, but
wheat in that chicken pot pies.
All right, Mom. All right. Well, thanks. Mom says 53 cents. Let's give Mom a round of applause. Thanks I appreciate that. We put you on the spot. So thank you so much.
Yeah.
Get back to your chicken pot pies.
Hey, you're going to love this at Thanksgiving. Trust me.
Yeah.
I will. So.
All right. Hey,
all right.
I love you, Mom.
I love you too.
Bye.
Bye.
There you have it. 53 cents a share from Brad.
Who's cracking them chicken pot pies? I'm not touching them.
So what do you got, Fat Man? What do you got?
Man, if it's 53 cents, it's going to be crazy. This whole time, I was like questioning my numbers, but I vow not to change my numbers. I come in at profitable 1 cent. I'm not confident about the response afterwards. I think they beat. I don't feel confident about 1 cent. I think it actually could. I feel like it's going to be in the negative, but I'm sticking to my number. Here's the thing. Long term, they will be fine. I'm interested to see the numbers for Mulan. I don't have a great feeling about that. And I don't know how the numbers have slowed. So if we look at Netflix, numbers slowed drastically as far as new subscriptions. So I expect I don't think it's going to be as bad, but I expect it to be a little bit of a down quarter. If they give guidance, will be good, but there's a lot of headwinds. So it's kind of like back and forth. Overall, they'll be fine long-term. If I was in this, which I haven't in my long-term, I'm not touching it, but if I was in this swing trading it, I think I'd play the run up and I'd definitely shave a little bit off, if not totally get out of it, because I think there's going to be a really good entry opportunity afterwards regardless. Yeah,
I mean, look, here's the thing, guys. With Disney, even if they come in and miss, look for areas that this probably would be coming down to for an area for a bounce. I personally like this around $120 a share if this actually comes all the way down that far on an earnings miss. Mom, I love you, but 53 cents ain't happening. I'm going to say they come in at around 7 cents per share. Is this what the earnings per share are? But we'll keep Mom's on the books. Listen, maybe she's surprised. Maybe she's closer than all of us. We'll see. But there's Disney. What do we got next on the list?
All right. So what was supposed to be number 3, but we'll make it number 4 is Palantir. Thursday after hours, 3 cents a share. 2 cents. I think you had 2 cents somewhere around there. Yeah. So let's just say 2 cents a share. Palantir is interesting. A lot of people, this is a recent IPO. Yep. I mean, it's a business that's been in existence. It IPO'd in September. I like it a lot. I've stayed away from it, just being an IPO and the volatility of it. Typically, I wait to see the first quarter of earnings. I expect there to be profit taking. There's no doubt in my mind there'll be profit taking. Yeah. But and the reason why I say this is they've already given their guidance, which looks really good. I mean, they're going to beat. They've given their guidance for 2021, and so that should already be built in. The only thing that'll really change is if they increase their guidance. I don't see them doing that with a new president, with a lot of uncertainty about what's going to happen. There is no conceivable reason for a company to increase their guidance. Yeah. They'd rather keep their guidance and outperform. Right. So it's highly unlikely. I think it's going to be a great earnings for them, but I don't think that it'll be material in how it moves the stock short term. Long term will be good. And just to give you guys, I pulled up so what's really important about Palantir I think, is the defense sector exposure.
Yeah.
Now, people could argue that with Democratic win that Biden, it would hurt the stock. They're going to spend no matter what. Maybe it wouldn't have been as much, but they're going to spend. They're going to continue to spend. I'm not worried about that. I think that's what I get excited about when thinking about Palantir. And I apologize. I just said all that stuff. They didn't give their guidance for 2021. I was thinking about Workhorse. My apology.
No, that's all good.
So anyways, with that being said, Palantir's defense exposure, I think they beat, and my number that I have for them, let me pull up, is 4 cents a share, slight beat. I'm looking for a buying opportunity, but I can't buy at these levels, Brad.
Yeah, I'm right there with you. For me, I actually just had them coming in and meeting expectations because I really don't know what the expectations are going to be for this yet. I do have a lot of faith in Palantir from a long-term perspective, and we've talked about this with the Chaos Crew folks, which, by the way, if you're just joining us, if you want to hit the join button and get access to the Chaos Crew where we talk about these things a little bit more in depth, then come on over. It's $4.99 a month. You can't beat it. But with Palantir, we talked about this being a solid buy under $10 a share. It's now gone up over $14 a share after hours on Friday. And I'm with you. I don't think that this would be something that I would be chasing all the way up here. Maybe wait to see what earnings do and what their outlooks are, and that way it can kind of give us a better snapshot of what to look like and what to look forward to in the future. Maybe there'll be other buying opportunities. I just don't think with the crazy moves we've seen over this in the last week, just looking at this daily chart, I mean, it was down in $8.90 2 weeks ago, then almost doubled on Friday. So I think that this is going to be another really good opportunity as far as an investment's concerned from the long-term side of things. But I would be waiting on this as well.
Hey, sorry, this is why we're live. We get to fix these things.
Yeah.
I was right. All right. So I wanted to give those numbers. Sorry, I'm like pulling up multiple screens here.
That's all right.
So they did forecast 2021. They predicted growth. They have monster growth that's expected. So third quarter, they expect growth of 50%. Yeah. And this year should be over $1 billion, which is year-over-year increase of 40%. And then they did forecast next year, which is 30% growth, which I expect them to exceed. But again, I don't think they'll increase. So I just wanted to clarify that because originally it was correct. So we'll see what happens.
Appreciate that. So by the way, there's 519 folks in here and there's only 122 likes. If we get those up, certainly would appreciate it. Help support the channel a little bit more. If we could get the thumbs up before we get to number 5, which is our favorite stock recently. Maybe after on Tuesday, it might be our favorite stock ever. We'll have to wait and see. But it is Rocket after all. Finally, we have earnings coming out for Rocket Tuesday after hours on November 10th. Estimated earnings per share at $1.09. If you guys don't know what's been going on in the housing market, I don't know where you've been. You haven't been on this channel. We've been talking about Rocket for a while now, ever since their IPO. And, we love this stock. We can't say more about it. Rocket is going to be interesting. I think they come in. I'm just going to preliminarily give my estimates here at $1.45. So $1.09 estimated, $1.45 is what I think is going to come in at. And the thing is, for the demand for mortgages are just unbelievable right now. Not even just from a standpoint of people just wanting to find homes, but like, it's interesting because we talk about remote work and we talk about the pandemic and everything else. This isn't just about going out and buying a new home. This is buying a new home and doing it safely. So when they go and use Rocket, you can do so all online. You don't have to worry about being in contact with anybody. You don't have to go to a major bank, all that good stuff. We just love Rocket so much and for a lot of these reasons. And I think they absolutely blow this out of the water. I think this is something that you don't just buy and hold for these earnings, but you buy and hold for a long time to come because Rocket, in my opinion, is poised to do extremely well. It's only $3 off from where it IPO'd at, and I think it is really undervalued at this point.
Absolutely undervalued. I have them monster beating, surprise, $2.10.
Damn.
Book it, baby. Book it. I'm telling you, I've been waiting for this day for so long, and we're so close. I can smell it, people. So join me on Tuesday because I am going to be there. Listen, this day, Brad, will define me as a human being. Either I go down in flames or I shoot to the heavens. But I can't imagine how this doesn't do really, really well. Now, my number is pretty ambitious, but I feel good about it. I do think there's going to be a run up. I'm not saying that this is going to blast off right after earnings, because it's typically pretty volatile. I could see this coming down to $20. But like I said, no matter which way it goes, if it gets above that 25, I expect it to run. If it goes down to 18, I'm dollar costing. If that goes under 20, I'm not going to do anything different unless they tell me something different about their business.
Yeah.
Think about this. They benefit if people foreclose on their houses because that's contracts for them. They benefit for refi, so the rates keep getting lower. People are going to continue to refi. They benefit for the lockdown because if you're at home and you're working from home and you don't have an office, you're going to get a bigger house. You're going to get a bigger place, right? So everybody's upsizing, if that's even a word. And so
Upgrading.
all these things play into what benefits Rocket.
Yeah.
So I don't know what hurts them other than the time of year, but that should already be baked in. I feel good about Rocket. You got Chaos Crew. You know what's up. You know what time it is. I don't have to say a word. I'm going to be dancing on graves, baby.
I have, one other thing that just got us excited about this even more was Zillow's earnings last week. And one thing one big key takeaway for me was the CEO came out and said, the longer the pandemic goes on, the more everyone is rethinking where they live, how they live, and who they live with. He said, our conviction is rising that these are not temporal trends, meaning that this isn't going to be temporary. We've talked about this from, almost since day one of the pandemic, when everybody was starting to work remotely, about how Goldman Sachs, 97% of their employees were working and being just as efficient, if not more efficient and more happy working from home than having to commute to work and everything else. And so to your point, and to, just to the point of what the CEO of Zillow was making, was that not only are you looking for a larger house for maybe your at-home office, but let's just say that you are going to be home more and you just want more space to move around in. I mean, if you're stuck with your family, you're hanging out all the time, you might want some more space to kind of separate yourself to get that alone time. That man cave is about to get a little bit bigger, I'm guessing. So, I think with what Zillow has kind of forecasted as far as the industry is concerned, it only benefits Rocket here. And I think that a lot of you guys responded last week as far as how many of you have already used Rocket, not only just for buying a new home, but also refinancing as well, which we haven't talked a whole lot about, but the refinancing side of things too is also a huge revenue driver for Rocket. So we love it a lot. We can't say enough good things about it. And we think that they beat very handily, and it is very much a buy and hold for a long time to come. And that is our top 5 stocks for this week to watch. Fat Man Zoom.